Hey, it's Cliff, and a hot topic in the cryptocurrency community right now is tokenizing real estate assets and putting them on the blockchain. Now, I think a lot of people are probably thinking, Cliff, I already own my house. I have the deed. Why would I want to put it on the blockchain? What is the benefit of this? So in this video, we're going to look into that and see what the pros and the cons are of putting your assets on the blockchain. So just to start things out here, I have a tweet from Sologenic who says the future of real estate is tokenized. See how one of crypto's fastest growing verticals and Sologenic is poised to take over the next market cycle. And God, I would love that. For anybody still wondering, yes, I am still invested in Sologenic and Coreum. I personally believe both of those coins are going to be a great asset to have in the next bull run. I think that's where money is going to be made. I think XRP is also going to be another one, especially with the regulatory clarity that we just received from the SEC. So let me just scroll down a little bit and see what the pulse of the community is right now. We got Coinholder says Sologenic is here to stay. The Lex Network, it's exciting to see how Sologenic is leading the way in tokenizing real estate. Looking forward to seeing the impact it will have on the next market cycle. Me too, definitely all for that. Some dude promoting his videos. Sologenic for the tokenized future. Cool, a lot of positive stuff, but you can see there's some negative stuff thrown in here too. Dead project, RIP. When is the license? We already got news about that. That's in my last video. Can't wait, let's go solo. I can see this coin in the 3 digits, blah, 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 zero action. So you can see there's kind of a mixed reaction. A lot of it's positive, but there's definitely some negative people out there. And that's kind of how I felt the comment sections of my last video was. I think it's a good time to remind everyone that we need this balanced conversation. Personally, I like that in my comment sections, and that's how I structure my videos. I want pros, I want the cons. I don't want to be a crypto moon boy. So if there's something that seems negative, I'm going to state it. And if there's something that seems positive, we're going to state that as well. So in the comment sections down below, please remain tactful. Nobody is going to change their opinion on what you're saying if you're a douchebag. And I get it. There's a lot of people that love Coreum and Sologenic. There's a lot of people that hate Coreum and Sologenic. So it becomes very emotional for people. It's kind of weird. It's like watching people argue about their favorite football team or something, but I just need people to understand that you can be passionate, but nobody is going to change their mind if you're being a douchebag to someone. So keep it respectful. I love the conversation. Please have the conversation. I love it when people are discussing ideas down in the comment section. Just keep it respectful. And so here's the meat of this. This is an article written by Sologenic. The title is Real Estate 3.0 Tokenizing RWAs with Sologenic. RWA is real world assets, real estate, right? So scrolling down. And so the main idea of this, just so we're all on the same page, is this. It states, this innovative process involves converting real world assets, RWAs, into digital tokens via the blockchain. So if you can think about that for a moment. You're basically taking your house, you're putting it on the blockchain, you own it as a token on your ledger, or whatever wallet that you want to use, and you're able to transfer it back and forth. Now, immediately when I think of this, it seems dangerous, right? It's dangerous in the sense that there's a lot of morons out there, right? Think of all the people that are falling for crypto scams in like Twitter comments, and they send their seed phrase to somebody. It's very dangerous in that sense that people could easily just send their house to someone else, and there's no way for them to get it back. So it could be risky for people that maybe aren't as financially savvy, or they're not good with technology. I could see somebody immediately just sending their house to someone else. That's just how it is. Or they get scammed. There's a lot of hacks that go on where people could lose their property. So that's a big risk. Anyway, getting back to it, it says the global real estate market is thought to be $317 trillion. A 0.5% tokenization rate would create $1 trillion industry. Now that's important for us because that's how we're going to get rich, right? Of course. So it's clear that this investment avenue is gaining substantial momentum and will have a huge impact on the next market cycle. And so then we have a quote from the business development at Sologenic. It is Michael McCaffrey, and he says tokenization revitalizes traditionally illiquid markets such as real estate by allowing investments to be fractionally owned, significantly enhancing liquidity and broadening accessibility to assets that might otherwise be financially out of reach for many. So I'm thinking about this. I'm like, okay, you can fractionally own shares of a property, kind of like a REIT. That's the closest thing that we have now to look at it as. A REIT is just pretty much a stock, or you're investing in a company that is basically owning multiple properties and renting them out, and you get the earnings from those. So basically you would have the idea that you could fractionalize sections of your home. And it makes me wonder, like, how does that work exactly? So if you're selling off certain aspects of a traditional home that you own, what does that look like in the sense of the other person owning the property, but yet you're living in the property? Does this essentially become like a timeshare? How does that work? That to me is kind of a gray area and sketchy, and I don't really understand it fully. But in a more traditional sense of what people would do is take some of the equity out of their house and sell it back to a bank or something because they need money. Yeah, that makes total sense to have more liquidity there. I just don't understand fractionalizing your house and then selling it off to different like private individuals. That doesn't make a whole lot of sense to me. But having liquidity in your house is a good and a bad thing. Again, if you're great with investments, probably a good thing because you're not going to go and just sell off your house. But if you're somebody who's not so great, maybe you're addicted to DraftKings or something and you're running out of money and you're a chronic gambler, being able to get rid of your house that quickly in a process that would normally take up to a month or so is kind of a safety net for people like you. So we kind of have to weigh the pros and the cons there as well. So the meat of this right here, it just says, in its simplest form, tokenized real estate is the process of converting real estate property or its cash flows into blockchain tokens. This transformation enhances liquidity. Absolutely does. It makes it easier for you to sell off your assets or trade it or whatever you need to do, streamlines the processes. Sure, totally agree with it. That process can take up to a month or longer sometimes, and all of the people that are involved in it, it's just kind of a headache for anyone that's actually bought a house before. And it says it enables digital ownership, which for me, as someone who's into cryptocurrency, I like that. I like to be able to own my assets and have complete control of them. But for some people, maybe that's not the best thing. The blockchain infrastructure and solutions provided by Sologenic and the XRPL ensures the security and transparency of these assets, offering various forms of representation based on the goal and the property being tokenized. So just looking at this, when they're talking about security and transparency, I don't think the XRPL has ever been hacked in a situation like this. But what we have seen in the past is smart contracts do get hacked all the time. And how does that work? Let's say we're hacked and we lose our token that owns our house. There has to be some kind of system in place at that point to kind of mediate a situation of theft. I don't know how that's going to work. I think that's something that definitely needs to be hashed out because these smart contracts, they do get hacked all the time. And that's not to say we shouldn't press with the XRPL and working real estate into Sologenic. It's just something to think about. We need to really double down on security because we're talking about people's livelihood. Most people don't invest at all. The only thing they have is the house that they bought, and their retirement plan is based off of the appreciation or the total equity in their house. That's all they have. That's it. So let's move into the pros. We want some pros in this. Why would I do this, Cliff? What is this going to do for me? So we have increased liquidity. The XRP ledger connects global real estate markets with cryptocurrencies, enabling fractional ownership, increasing transparency, and reducing counterparty risks. This enhanced liquidity benefits investors and facilitates easier transactions. And I'm totally for that. I can see where they're going with this. We want transparency with the blockchain. We'll have the blockchain. Cliff owns this house. Okay, that's pretty easy to see. There's no discrepancies there, right? Love that. Fractional ownership, I definitely agree with that. If I want to sell you a little bit of my house, push off the equity, I really need that money or something to pay some bills or whatever. If I'm in a financial struggle, it's very easy for me to transfer a token. It's very easy for me to go through that process and just transfer the token, and it's not going to take me a month. And reducing counterparty risk. There's a lot of times there are scams out there where people will try to sell a house that isn't theirs. And some people aren't financially savvy enough in the real estate market to understand these scams. So if we tokenize a house, there will be one token for that house. It'll kind of alleviate some of the confusion on buying a house. Another big one is optimizing costs. It says by leveraging the XRPL's advanced infrastructure, Sologenic is able to make real estate transactions efficient, reducing unnecessary costs. Now, it's super expensive to buy a house, anyone that's done that. This will lower some of the costs and make it a little bit more easier for people to get into buying a house. Just looking at the XRPL and Sologenic's fees when you're using it, it's very, very small of a cost to use these platforms. And finally, lowering barriers to entry. The XRP ledger ensures fractional ownership, allowing smaller scale investors to participate in real estate investments by removing the need for significant upfront capital. This inclusivity expands market participation and opens up opportunities for a broader range of people. Now, I probably don't need to tell you guys this, but it's becoming very difficult for younger people to buy houses. Wages are not that great and property values continue to rise over the long term. They fluctuate a little bit in the present, but they're still overall, they always rise up. And the wages on average are not really increasing enough for being a property owner. So just to bring up a quick article, CBS News published this in late September, where it says, homes unaffordable in 99% of nation for average American. Now, 99% to me seems like a kind of high number, and maybe you don't agree with CBS News. Whatever news you agree with will probably tell you the same thing, that it is harder to buy a house for most Americans. Now, maybe it's not 99%, maybe it's 75%, 50%, whatever you agree with. It's difficult. Let's just leave it at that. It's difficult for younger people to be buying a house right now because the wages are just not there. So that makes me think, and maybe you can respond to this down in the comments, respectfully, of course. If we are creating a world of fractional investments in all of our real estate, won't that increase the price even more? And the wages are still going to remain stagnant, making it even harder for people to buy homes? Is BlackRock just going to own all the homes and we're going to rent for the rest of our lives? Is that how this is going to be? Who knows? And finishing their article out, they talk about some of their cons that they see in making this happen. It says, while real estate tokenization presents enormous opportunities, it also comes with challenges like regulatory complexities, which is pretty much what we were talking about in my last video with the interview with Bob Ross. It says technical issues, market acceptance, and shared cost. Now, this is a big challenge for them to take on, let's be real. They're pretty much changing how the entire industry works. Of course, there's gonna be some challenges. Of course, us here, we're gonna have some questions. How is this going to work? But I think overall what they're trying to do is a positive thing. I think the overall sense of this is to make it easier for people to actually control their own assets. So in that sense, I'm for it. But there's gonna be some things that they gotta hash out for sure. And it's gonna take time. So when it comes to my position in Sologenic and Coreum, I already wrote that money off. I plan to just hold it forever. And if it takes off, love it. I made a ton of money. If it doesn't, that's okay. It's fine. It's just a bad investment. There's no need to get emotional about it. There's nothing emotional about investing. Let's just take that out of it entirely. But yeah, I want to cut this video off before it gets too long. I think there's a lot of things we could go over when it comes to this. There's so many different avenues and questions that could come up. But for this one, I think that's going to be it. Thank you for watching.